What's up, you guys? Welcome back to the channel. Now in today's video, we're going to go over if Churchill stock is still a buy right now and whether you should continue adding shares to your portfolio or whether right now is possibly a foolish time to be buying shares of Churchill. And I'm also going to touch on some of the risks that are involved in investing in a company like Churchill. But before we actually get into the video, for those of you who are new, my name is Evan and I make videos showing you guys different ways to make money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, if you guys wouldn't mind hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. But with that out of the way, looking at Churchill's price today, they're actually trading around $57 as of right now. And as you guys can see from the chart here, this is the last 3 days of trading, and Churchill actually was trading around $37 3 days ago, and they've almost doubled in price in just the last couple days. Now, of course, this is drawing a lot of red flags for many investors, seeing as though they've doubled in price in just a couple days, and a big majority of that price increase happened in just one trading day. Now, even though they are trading close to $60, it looks like they are starting to form somewhat of a support line, and you can see by this line I have drawn here, right around $57 or so, it looks like there is some support there. Now, while it's not a super solid support line, it's actually served as resistance twice, and it's been support a few times. So I think at least as of right now, Churchill is probably going to continue pulling back because they have been for the last few hours. And then once they hit around that $57 area, I wouldn't be surprised to see them continue crawling back up and maybe get to $60, which looks to be somewhat of a resistance point. And then if Churchill can take off and get above $60, of course after that, the next resistance is their all-time high at about 65. But with the growth that we've been seeing Churchill have in the past, and how much they've actually spiked up in a single trading day at multiple points in the past month, I wouldn't be surprised to see them shoot up past $65, especially going into next week. And one thing that a lot of investors discuss is Mondays, because most investors anticipate an announcement on a Monday, which would be the best day of the week most likely for an announcement to come out between Churchill and Lucid, officially announcing a merger between the two. Now, before we get into the meat and potatoes of the video and whether you should actually be buying Churchill Capital at the price they're trading for right now, I do want to mention and go over a couple reasons as to why they're still continuing to move higher despite no official announcement between Churchill and Lucid Motors. So like I showed you guys the chart, they've actually jumped up 90% since Monday, and that does include today's trading, but a lot of this gain is on the rumor that a merger between Lucid Motors and Churchill Capital could go through at some point in the near future. And as of right now, this SPAC is actually valued at a market cap of $15 billion, and that's without any operating assets. So that is one of the risks you're putting yourself at by investing in Churchill as of right now. Now, it would be a lot different if Lucid was public right now and if they actually had vehicles on the road. And I'm going to touch on that later regarding Lucid releasing vehicles in the next couple months. But this is still at the very high end of an estimated valuation for a combined Lucid merger based on a $10 share price. And again, today's shares are trading almost at $60. And for investors that want a potential long-term stake in Lucid Motors, you are having to put up some risk by investing in Churchill Capital. Because again, I do want to mention, like I've said in previous videos, this deal and this potential merger is not 100% guaranteed. Now, there are a lot of things leading investors to think that a merger is more than likely going to happen. But again, it's not guaranteed at this point. So you do take on a lot of risk by investing in Churchill Capital. But the same thing could be said by investing in a company like NIO, where they're really only putting out about 50,000 vehicles per year. Now, that's not to say that NIO is not worth a lot of money, but it may be easier to argue that they're not worth nearly $100 billion, only delivering 50,000 vehicles per year. I mean, if you're investing in a company like NIO or Tesla and they're way overvalued, at least when you look at their revenue to sales. Now, I don't want to get into all the nitty-gritty details, but when you look specifically at revenue to sales, both Tesla and NIO are quite overvalued. Now, it depends on how you look at it, but just looking at it from that perspective, it may make a lot more sense to invest in Churchill Capital, especially considering the fact that if this merger does go through, Lucid is probably going to be one of those top auto manufacturers in the electric vehicle space. Now, it may take them quite a few years to get up there, but I think the sky is really the limit for Lucid Motors, and I think a lot of people see that as well, and that's why so many people are pooling into Churchill Capital as of right now. But just to give you guys an idea of how much people are actually buying Churchill Capital stock, there's been almost 240 million shares that have changed hands in the last 3 trading days. Now, this is pretty remarkable when you consider the fact that only 207 million shares are tradable. So over the last 3 days, there's been more shares traded than there are shares tradable. If you just let that sink in for a minute and you realize really how much this is actually being traded, there's a lot of people and a lot of investor hype around Churchill Capital as of right now. But with all this said, this probably leaves you guys wondering if Churchill Capital is still a buy as of right now. And while they have run up over 400% on rumors alone, I think it's a lot different for Churchill Capital compared to other SPACs we've seen in the past. And that's because they're probably going to be merging with Lucid Motors. And Lucid Motors isn't just some run-of-the-mill electric vehicle company. They actually have a lot of things going for them, and one of the biggest things is their CEO, Peter Rawlinson, who is actually an engineer at Tesla. Not only that, but he also worked at Lotus and Jaguar. So he really knows the business of engineering cars, and this is why a lot of people have been looking at Lucid Motors as a potential heavy competitor to Tesla. And the Lucid Air is also supposed to be pretty big on release, and it's going to have a reported range of about 519 miles per charge, and also the ability to charge up 300 miles of range in just 20 minutes. And with Lucid Motors being in the luxury end of vehicles, they really could give Tesla a run for their money, looking at the fact that a lot of people who are buying electric vehicles already have a decent amount of wealth. Now, I don't want to say they all do, but electric vehicles as of right now are kind of a social status. So I think a lot of people who would already buy a Tesla vehicle would more than likely be able to afford, or would somehow find a way to afford, a Lucid vehicle if they decided that this vehicle was better than a Tesla. But of course, there are risks in investing in Churchill Capital, and the main risk is that a merger is not official yet, and Churchill Capital is just a blank check company, and their entire business model is just to raise money to bring a company public. And then the risk with Lucid Motors, even if they were public as of right now, they don't have much to show in terms of sales, with their first model, the Lucid Air, expected to release this spring. So that's really only in a couple months that their first vehicle is probably going to be on the road. And they're also expected to release 2 to 3 other versions by the end of the year. And then their base model of the Lucid Air is expected to release early 2022. Now, why they're actually releasing the base model after all of these other models, it kind of beats me, but there must be some reason why they're doing it that way, and something that makes sense from a business perspective. So with those 2 risks out of the way, the first one being that Churchill is really only just a blank check company, and that there's no guaranteed merger, and then also the fact that Lucid doesn't have any sales to show as of right now. The last major risk is that there could be a collapse in a company like Churchill, and the primary example to show this is actually Nikola, who saw their shares collapse 67% since June. And this was over controversies of their actual technology, along with accusations against their management. And this also led to them losing a deal with General Motors to build their Badger pickup truck. But I think at least in terms of Lucid Motors, they do have a much better foundation than Nikola. And with Peter Rawlinson's presence, this gives them a lot better background. And it also seems a lot more promising, much like Tesla and how we've seen Tesla grow. I think the potential is there for Lucid as well. And while a SPAC deal hasn't been made yet, or at least it hasn't formally been announced, it's been one of the best performers in this space, and they're now valued around $13.5 to $15 billion. And their shares are actually worth more than 6 times the SPAC's original $2 billion in cash. Now, one key thing to remember is that if Churchill doesn't actually make a deal with Lucid Motors, they're going to be worth nearly nothing. They're probably going to pull all the way back down to $10 a share. And I believe that's what they IPO'd for. So just keep that in mind, that if a deal doesn't go through, a lot of people are going to be losing a lot of money. But like I mentioned previously in another video about Churchill Capital, I think a deal is more than likely going to happen, because as of right now, with them raising so much money, they either have to merge with Lucid or a company just like Lucid that has a lot of potential in the future. Because if that doesn't happen, or they announce a merger with a smaller company that's not nearly as well known, a lot of people are going to pull out their money, and Churchill is basically going to go all the way back down to what they were trading for at IPO. So there are a lot of assumptions regarding Churchill Churchill and Lucid Motors. But at least in my personal opinion, I think a lot of this is baked into the price. And I think a lot of people are starting to realize that a merger is more and more likely as we continue going down this path. Because again, Churchill Capital is in kind of a sticky situation with how much money they've raised and with all these people expecting them to bring Lucid Motors public. Now, like I mentioned, I did discuss in a previous video a couple of reasons why this merger is more than likely going to happen and why Churchill Capital almost has to make an offer at this point, and they sort of have to accept any terms that Lucid gives them. So if you guys haven't seen that video explaining why that could be the case, make sure you guys go and watch that video. But I guess the overall message throughout this video is just to do your own research and make sure Churchill Capital is a company that you're okay investing in, because there is a lot of risk, but the potential for a lot of upside is also there as well. But for those of you who made it this far into the video, I want to know if you guys are actually investing in Churchill Capital as of right now, or maybe if you're waiting to invest in Lucid after they go public and after it's official. So let me know down in the comments, and if you guys are actually invested in Churchill, let me know your average share price and how many shares you own down in the comments. Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll actually get 2 free stocks. And if you guys want to join the Discord, make sure you guys join using the link in the description, or you can also use the top pinned comment down in the comment section. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.